the Union Budget 2021 to 2022, the government laid a lot of emphasis on asset monetization as a means to raise innovative and alternative financing for infrastructure and included a number of key announcements under National Monetization Plan and similarly under National Infrastructure Pipeline, etc. Also in March 2021, the Parliament passed a bill to set up a national bank for financing infrastructure and development to fund infrastructure projects in India. To get more detailed information, we have our inaugural session on Indian policies in infrastructure investment and financing. Ladies and gentlemen, it's my pleasure to invite our guest of honor, Mr. Amitabh Kant, Chief Executive Officer, NITI Aayog, Government of India, to deliver the address on Indian policies in infrastructure, investment, and financing. A very warm welcome, Mr. Kant.
Distinguished guests, ladies and gentlemen, let me at the outset extend a very warm welcome to all of you to this ETInfra Investors Meet 2021, organized by Economic Times. Dear participants, our government has consistently delivered on its commitment towards accelerated and inclusive socio-economic development. Union Budget 21-22 has only further strengthened this resolve through the Strategic Direction to Infrastructure Development Program, and therein backed by first-of-its-kind initiatives such as the asset monetization. National Bank for Financing Infrastructure and Development, the NBFID. Substantial groundwork has been done by the government to deliver on the budget announcements and to meet the targets and vision of the Honorable Prime Minister for infrastructure development in the country. In order to boost the construction in the country, Government of India has decided to come up with a single window clearance facility to accord speedy approval of construction projects. India plans to spend 111 lakh crores on infrastructure projects through the National Infrastructure Pipeline from 2019 to 2025 to ensure sustainable development in the country. The Finance Minister launched the National Monetization Pipeline, estimating aggregate monetization potential of rupees 6 lakh crore over the 4-year period from 2022 to 25, which is coterminous with the balance and IP period. The nation's infrastructure push will cover not just roads, railways, ports and airports, but also projects in renewable energy, agriculture, as well as industrial and social infrastructure. The consensus view is that underinvestment in infrastructure is one of the biggest binding constraints on raising the growth potential of the Indian economy and improving competitiveness. In March 21, the government passed a law to establish the National Bank for Financing Infrastructure and Development, NBFID, a development financial institution that will aim to have a lending portfolio of at least 5 lakh crore rupees in 3 years and seek to attract multilateral institutions, sovereign wealth funds, pension funds, insurers, financial institutions and banks to raise money from the sale of financial instruments backed by state guarantees. The main objective of NBFID is to attract investments for infrastructure projects located in India and also facilitate the development of the market for bonds, loans and derivatives for infrastructure financing in the country. Over the course of the last couple of years, substantial institutional capacity has been developed in the asset monetization space, as a lot of stable revenue generating infrastructure assets have gotten structured and monetized. India has developed a solid track record of attracting investment by institutional investors in infrastructure assets such as toll roads, transmission networks, pipelines and telecom infrastructure. Capital to the tune of about 2.2 lakh crore has gotten churned in Indian infrastructure. Many more transactions are in the market as we speak. Asset monetization needs to be viewed not just as a funding mechanism, but as an overall paradigm shift in infrastructure operations, augmentation, and maintenance, considering the private sector's resource efficiencies and its ability to dynamically adapt to the evolving global and economic reality. New models like infrastructure investment trusts and real estate investment trusts will enable not just financial and strategic investors, but also common people of India to participate in this asset class, thereby opening new avenues for investment. India's economic growth outlook will be an attraction for long-term global investors as global pension funds and sovereign wealth funds seek growth amid record low interest rates that are expected to stay depressed for some time as the pandemic continues to be a drag on the global economy at large. A strong corporate bond market will play a significant role in the government's sharp focus on India's infrastructure build out to spur growth. By means of asset pooling, a well capitalized credit guarantee mechanism, and right hedging of risks that will help mobilize funds for infrastructure creation. Pooled assets can attract takeout financing from the corporate bond market through InvIT structures, co-obligor structures, and securitization, important for asset monetization, which would free capital for new projects. The scale and diversification of these alternative financing structures will open door to foreign capital and patient institutional investors. RBI, SEBI, and pension funds like EPFO, GIC, LIC have taken various measures to develop the financial ecosystem for investment in infrastructure space and increase the liquidity arrangement in the economy. Various initiatives, including channeling foreign capital in the bond market by increasing FPI limit from 9% to 15% by RBI. SEBI relaxed the norms for debt issuance and InvIT's restructure to minimum issue size for retail participation. Launch of exchange traded funds and also relaxing the norms for participation by domestic pension funds like EPFO, GIC, LIC. Government is also taking initiatives under ESG financing for tapping patient capital from developed economies, especially the sustainability conscious one, influencing their investing process and flow of global capital. The good part is that today all the 50 companies in NSE Nifty index have board level committee on corporate social responsibility, while nearly a third have a committee that deals with sustainability and ESG related projects. This will help the country to meet its commitments under COP26, recently held in Glasgow, where India showed its full support for adherence to ESG standards. Through ET, I would also like to reach out to all global investors, FIIs, universal banks, pension funds, private equity partners to be a part of the India's infrastructure story and be an equal force in making it a success and support the government in achieving its vision, which will lead to inclusive growth and opportunities for all stakeholders at large. It will also lead to enhancing India's growth story in the coming years. Thank you very much, ladies and gentlemen.
Thank you, Mr. Kant. Now I would like to invite Tuhin Kanta Pandey, Secretary, DIPAM, Ministry of Finance, Government of India, to address our August gathering.